In the world of legal battles, financial stress can be a major hurdle. Many plaintiffs find themselves, considering lawsuit loans or pre-settlement funding. But here's the catch. These terms are often confused. Understanding the difference can significantly impact a case's outcome. Lawsuit loans, despite their name, are not true loans. Traditional loans require repayment regardless of the outcome. In contrast, lawsuit funding is non-recourse. This means repayment only occurs if the case is won. So how do lawsuit loans actually work? First, a plaintiff applies with a legal funding company. The company reviews the case, not the applicant's credit score. If approved, a cash advance is provided. The repayment comes from the settlement, but only if the plaintiff wins. However, lawsuit loans come with pitfalls. They often carry high interest rates that can compound monthly, leading to significant debt. Hidden fees can also chip away at the final payout, and some companies may use deceptive contracts, leaving plaintiffs in a tough spot. Now, let's talk about pre-settlement funding, the smarter alternative. This is the correct term for what many mistakenly refer to as a lawsuit loan. Pre-settlement funding is essentially a cash advance against a future settlement. How does pre-settlement funding work? There are no credit checks involved. Approval is based solely on the strength of the case. There are no monthly payments either, as repayment occurs only when the case settles. The best part, if the case is lost, there's no repayment required. Pre-settlement funding is particularly useful for covering immediate expenses. It can help pay medical bills after an accident, cover rent or mortgage payments while out of work, and prevent settling for less due to financial pressure from insurers. When it comes to choosing a funding provider, Alliance Litigation Funding stands out. They specialize in low-cost pre-settlement funding, steering clear of high-interest lawsuit loans. Why do plaintiffs trust Alliance? For starters, there are no hidden fees, and contracts are clear and straightforward. Funding can be fast, with cash available in as little as 24 hours. Alliance also offers some of the best rates in the industry, ensuring lower costs compared to competitors. Most importantly, it's risk-free. Repayment only occurs if the case is won. What types of cases does Alliance fund? They cover personal injury claims, car accidents, medical malpractice, workers' compensation, and slip and fall claims. Now, let's address some frequently asked questions. Is pre-settlement funding the same as a loan? Absolutely not. Loans require repayment regardless of the outcome, while pre-settlement funding is non-recourse. How much funding can a plaintiff expect? Typically, amounts range from 10 to 20% of the expected settlement. And what happens if the case is lost? With Alliance, the answer is simple: nothing. There's no repayment required if the case doesn't go in the plaintiff's favor. How quickly can funds be accessed? While some companies may take weeks, Alliance can approve and fund cases in as little as 24 hours, providing much needed relief during a stressful time. In conclusion, if financial assistance is needed while waiting for a lawsuit to settle, pre-settlement funding is the clear choice over lawsuit loans. It's more affordable, faster, and safer. Don't let financial burdens force a low settlement. Consider pre-settlement funding today and ensure a fair fight for what's deserved. For those interested in exploring this option, Alliance Litigation Funding is ready to help navigate the process. With their expertise, plaintiffs can focus on their cases without the added stress of financial instability. Call today at 609-314-0439 or visit www.alliancelitigationfunding.com. Take the first step towards financial relief and get pre-settlement funding today. It's a smart move that can make all the difference in securing the compensation rightfully deserved